Hello, everybody, and welcome to this week's Middle Class Investor. This is Seth Martin, your host, and we're looking actually at the SPY right now because it's what I was looking at last, but let's look at the S&P 500 index, and you can see we had an up week after mostly down during the week. We kind of rallied back and closed higher for the week. So I made a video the other day because just in case this thing was topping, had been topped and was coming back down. But it looks like the market wants to take out. I mean, just as of right now, it looks like to me the market wants to take out this high, which makes this this retracement a little bit more complex. If you were to zoom in, makes it a little bit more complex. In fact, I do want to zoom in because I want to tell you why I think it's not a rally. So I think I did this before. I think I said we had a clear 5 waves down. I'm going to go to a 3-month. Let's just go to 60 days. Let's zoom in on this 60 days, and you can clearly see. Hopefully this will all fit in here. If not, let me just pull up just a little bit, and I don't know if I can fit all this in here. I'm trying to fit all this in here. Okay, maybe not, but you can see here we got a wave 1, kind of a complicated, wave 2, and then we had this blistering wave 3, and a wave 4 back up, and a wave 5 down. Okay, so that signals the change in trend. Now there's some gaps in here. We talked about that. There's a potential, there's some potential pattern here that we just didn't see because of the gaps and other things. But what I want to do now is I want to look at the move back up. It looks like maybe this will fit on the page a little bit better. So you can kind of see, you can see like let's go real small here. You can see like an A, B, C here, and then a down. And then, so you can kind of see this right here, this A, B, this whole thing, A breaks down into A, B, C, and then B, and then C. And then this looks like maybe a complex B. And then maybe what we're going to do is we're going to finish out a C up into this area around, I don't know, 2750 to 2800. In which case, then we'll get potentially our wave 3 down. Now, let's just look at support and resistance too, because well, first of all, we can get a pivot off of this. Well, I tell you what, let's go back. Let's not get into the weeds on that. Let's stick with the weekly chart, because at the end of the day, you've got 401ks, IRAs you're dealing with, but suffice it to say, we might look for the market to rally pretty substantially, actually. I mean, Friday's rally was pretty substantial, and it's not even fully represented here by the week. So you might see this market rally in this final wave C up into 2800. The other reason I bring that up is Friday's action up was 4-to-1 on the advanced decline ratio, which is pretty substantial. It's not as substantial as like a wave 3 kind of rally, but it is pretty substantial. So it does look like the market has more to go. So expect some up, maybe Monday, Tuesday up, and then maybe Wednesday it starts to roll over and go the other way. All right. Let's look at the 13-week Treasury, short-term rates. Jerome Powell is going to be testifying in front of Congress this week for his first time. So you might see some volatility in the market just kind of intraday. But clearly the short-term rates are going up, and I suspect Jerome Powell will be talking about how rates, need to rise, and that the Fed will be raising rates. Because as we've talked about on here, the Fed follows rates. The 10-year Treasury also moving up, although might be ready to take a break here. Just in a small wave 1, we'll get maybe a small wave 2 back to support, which is around this 2.6 area. So, once kind of using general technical analysis, this was resistance. My nose is a little bit stuffy today. I apologize. So this is resistance here. Of course, it broke out. And we've done this on falling diagonal lines too, but sometimes you get kind of a retrace back to that and then resume the trend. So I would look for the bond market to rally a little bit next week. Not much, but probably for the next maybe couple of weeks even. Or we could just get a really sharp pullback, and that'd be it, and then it takes off again. There's a lot more talk now about the Fed, interest rates, bonds, the treasuries, the government's ability to sell treasuries. It's really actually fascinating how fast people shifted the conversation to it's not a problem to, well, maybe it's a problem. So I thought that was really interesting, and I suspect that talk is going to get louder and louder. All right, here's the VIX. As you might expect, the VIX was down last week with the market being up. So this was the week of the big sell-off that ran way up to 50. VIX dropped back down pretty rapidly, and we could have another week. We could actually have another week. Actually, what we could have is we could have kind of an open like this, and then the VIX actually run way down, but then finish up. So I would look for the VIX to do something like this next week as the market rallies a little further, but then reverses. And then the following week, maybe, the VIX starts to take off again. Let's look at some of these countries that we look at, like Germany. They've all been. It's interesting. They all look the same as our market. Look at these two big down weeks, and then a climb back up. Japan, same thing. Two big down weeks, and then a climb back up. United Kingdom, same thing. Two big down weeks, and then a short climb back up. So nearly all of these markets have retraced about 2/3 of the down move. In fact, let's zoom in here, and you can see that. Should be able to see that here. Here's the 61.8% retracement right here, and you can see we've exceeded that a little bit, and could exceed it a little bit more, maybe up into this area, just below 2,800. If in fact this is the first move down, we could have a substantial sell-off. Now, it's possible that this market rallies to a new high. But right now the move up doesn't look like 5 waves, and it would need to look like 5 waves in order to be a trend continuation up. So I'm inclined to say that that's probably not the case. Again, there's some gaps on the way down, and maybe there's some things we don't see. But right now, I would say there's about a 70% chance this market goes a little higher and then sells off in a wave 3. That's a fairly high degree chance. All right, let's switch over and look at gold and some of those products, some of those charts. Gold, gold could turn around right here. Had pretty substantial sell-off last week. But it still feels like to me gold wants to kind of come up into this area before it sells off, but it might not. It could be that this is it, and it's going to sell off, and we're going to come all the way back down to here. I wouldn't be a buyer, or I wouldn't be a seller of gold until it got up here, and I wouldn't be a buyer of gold until it got to here. So maybe that's the best way to talk about gold and silver. Same thing with silver. Although you could move silver almost looks a little bit more complex, like a triangle. in which case it should break out soon. So you can kind of see a triangle here and here. So, you know, this is like an, I don't know, A, B, C, and then this whole thing is an X, and maybe there's a bounce up and then down. I'm not sure, but it could be that it's already started down, you know, and this is the first move in the move down, and it's going to come down to here. But both of these markets are a little bit confusing right now, and I wouldn't be a buyer until it got down to here, and I wouldn't be a seller until it got up here. That's probably the easiest way to look at those markets. The euro looks like it wants to sell off here. It made this this really, you know, kind of interesting candle with this long wick sell-off day, and then came through and followed through the next week. I mean, these are weeks here, excuse me. So this sell-off week was, you know, you had this long wick on this candle, and you got several long wicks, but this one, you know, came and then followed through. So, you know, you can kind of see, you know, a little bit of a triangle here, but I don't know. This could just be the top. You know, the good news is market doesn't just fall straight down, so we should get, you know, some move down, and then, you know, some sort of rally back up, and you can short the euro in this area if you want to be a little bit more sure about where it is in the trend. The US dollar CAD, again, you know, this was up this week, and we've been looking at this as a long, but it had a pretty good reversal candle. So I would say, you know, if we get a candle like this next week, you know, maybe look for the US dollar. Whoops, sorry about that. Maybe look for the US dollar CAD to pull down below this low, but above this low. You know, maybe into this area right in here. And then if it does that, then maybe look for a long position. Otherwise, you can just wait till it breaks out and comes back to the line. If it comes back to the line, sometimes they don't come back to the line. That's why I bring this up. But this looks like a pretty decent sell-off here. I mean, it got right to this trend line and rejected it. So, you know, it could just turn right back around and go up next week. But if you get something like this, then look for the US dollar CAD to come all the way down to just below this pivot here. There's a pivot right there. So we got a decision point area right below this pivot. It's likely to come into, and then if it starts to turn around at that point, then you could take a long position in the US dollar CAD. I think that's a fairly low risk opportunity. All right, let's look at oil. Oil had a little rally last week after selling off. Again, this could be, this is likely to be the bear market rally. Oh shoot. Sorry about that. That thing keeps popping up. So we can, yeah, there we go. So this could be the bear market rally after the first sell-off, and if that's the case, then, you know, oil should continue down. Certainly wouldn't be long oil here. We've got a larger resistance area here, a larger time frame resistance area. So I wouldn't be long oil right here just yet. Would wait for it to take out this high, maybe pull back, and then have a couple of weeks outside of this area before I were long oil. You know, and you could wait if you wanted to be short oil, but you wanted more confirmation. You could wait until it takes out this low to get short oil. But I think oil is done for the time being. We should see some lower gas prices on the horizon, which is not a bad thing in and of itself. Let's see if there's, I don't need to make a real long video today because we had to get midweek video, but I just want to look to see if there's anything else we need to be bringing to your attention. The big thing is the bond market. If you haven't gotten out of the bond market looks to be it looks to me like it's going to give you a bounce next week. So, sometime next week or the week after might be a good time to get out of the bond market as the yields pull back and retest the breakout area. You should get a rally in bonds opposite, the yield move. All right, everybody, that is it for this week. I really appreciate you coming in. Forward the videos to your friends and family members. You can follow me on Twitter at Investor Class for Middle Class Investor, or you can just search on Middle Class Investor if you can't remember at Investor Class. I don't post there a lot, but occasionally I find an article or something that I want to retweet that I think is interesting. So you could go ahead and sign up there just in case. Otherwise, this is the primary place to come and see what is going on with the market each week for the Middle Class Investor. All right, everybody, take care. Bye-bye.